Hello and good afternoon. Holly Shields here reporting to you live from Kalkine Studio in Sydney, where it's lunchtime, which means it's time for the mid-market pulse. Let's dive into the Australian share market performance by the mid-session trade and check out the biggest winners and losers of the day. Well, Aussie shares were trading in the red by the mid-session, pairing opening gains dragged by mining and energy stocks. The correction in commodity prices as well as mixed cues from Wall Street also weighed on the market sentiment. By the afternoon trades, the benchmark index ASX 200 was down by just 5.8 points. The index opened high today, but soon paired again as much as a fall of 0.3%. And then on the sectoral front, 8 of the 11 sectoral indices were trading higher, led by consumer discretionary and healthcare, as well as the property space. The consumer discretionary sector gained the most, rising 1.4% by lunchtime. And then it was followed by a 1% gain in the healthcare sector and 0.9% in the A-REIT space. Among others, telecom, tech, consumer staples, tech utilities, and also utilities were trading higher. Backing the trend, however, the materials sector was the worst performer with a 1.55% loss, followed by energy, which fell 1.3%. The fall in materials and energy stocks were due to a fall in commodity prices, while iron ore prices dropped 5.6% to $117.50 per ton. Brent crude was unchanged at 84.61 US a barrel. The benchmark West Texas crude oil lost 0.1% to just over $82 per barrel. Meanwhile, the top gainer on the ASX pack was healthcare firm Helios, which rose over 5% by the mid-session. The share price extended its rally for the second day after reporting robust earnings in the September quarter. Revenue rose by 44% in this quarter of the financial year 2022 on the back of COVID-19 testing and a stronger performance by all business segments. Some of the other notable gainers include healthcare equipment firm Fisher & Paykel, retailer Wesfarmers, Auckland International Airport, and travel business corporate Travel Management. On the flip side though, Lynas Rare Earths was the top laggard with a whopping 6.2% in losses. The stock price dropped after it reported a drop in sales during the September quarter. Along with Lynas, some of the other worst performers were transportation business Aurizon Holdings, steel producer Champion Iron, coal miner Whitehaven Coal, and resource company Aluka Resources. Well, it's time now for a short break, but stay tuned because I'll be right back with more trending market updates.
Hi there, James Preston for Kalkine TV. Are you into gaming and virtual reality? Does AI and the endless possibilities it entails capture your interest? Or are you constantly trawling through the web to try and discover the latest updates and innovations in the tech space? Well, let us do the work for you. From the latest product launches to shocking affairs on the World Wide Web, exclusive interviews and information about the top companies like Apple and Google to brand new tech startups vying for your attention. Kalkine's Tech Beat has the latest in what matters in the world of technology. Join me every single Thursday on The Tech Beat, exclusive to Kalkine TV.
Hello and welcome back to the mid-market commentary. This is the mid-market pulse. Let's have a look now at stocks that created a buzz on the ASX today. Well, shares of travel agent Hello World gained over 2.5% after releasing their business update for the September quarter. The total transaction value rose 50.7% during the quarter under review, with revenue rising 62.7%. And meanwhile, shares of lithium miner Cobra traded marginally lower following the quarter business update. The company produced a record lithium spodumene concentrate from its Mount Catalin operations in September. According to board members, it contracted average pricing for the December quarter and almost doubled that of the previous for spodumene concentrate. And also, insurer IAG Group shares traded 0.5% higher after the company said that the business had performed well in the first quarter. IAG, in its annual general meeting, informed shareholders that the first quarter of the financial year has started well, and it still expects to grow with gross written premiums by the low single digits in 2022. Its insurance margin is still forecast to finish between 13.5% and 15.5%. Also, IAG said that the lockdowns in Australia and New Zealand had reduced motor vehicle claim volumes in a benefit partly offset by claims cost inflation. And meanwhile, shares of Hummgroup rose over 1% after it hiked buy now, pay later transaction volumes 44.5% to $308.8 million. The total transaction volumes climbed 39.6%, meanwhile total customers climbed up 6% on the prior corresponding September quarter. And on top of that, the share price of Aurizon Holdings dropped over 5% after the rail operator proposed a $2.35 billion deal to acquire One Rail Australia from the Macquarie Group. Aurizon said it would fund the deal from existing and new debt facilities. And in 2021, One Rail Australia posted a EBITDA of $220 million. Plus, shares of intelligence software business NUIX jumped over 8% after it appointed Jonathan Rubinstein as its new CEO. Rubinstein, the current chief executive of ASX-listed software business Infomedia, will be replacing Rod Vaudry. The company also announced that its interim chief financial officer, Chad Burton, has been promoted to the full-time role. And in other news, shares of Lynas Rare Earths plunged nearly 8% after it reported a drop in sales during the September quarter. The Malaysia-based rare earths miner Lynas has blamed COVID-19 cases in the country for shutdowns to its operations that contributed to sales falling in September compared to the prior quarter. It has also submitted detailed engineering and design work for a US-based heavy rare earths facility, with the US Department of Defense evaluating its submission. And lastly, one stock has taken to the skies. Shares of Qantas Airways rose over 1% to hit a fresh 52-week high after it unveiled plans to ramp up its international travel plans. Australia's largest airline by fleet size had said it'll bring forward the restart of more international flights to popular destinations from Sydney and operate regular flights to Delhi. The latter will be the first commercial flights for Qantas between Australia and India in almost a decade. Plus, the airline will be bringing back two of its Airbus A380 aircrafts earlier than planned. And it is also in discussions with Boeing about accelerating the delivery of 3 brand new 787 Dreamliners, which have been in storage for most of the pandemic. Well, with that said, that is a wrap for now on the show, but keep watching Kalkine TV for more trending market updates from Australia and around the world. Holly Shields signing off.